So you got an IRS notice and you don't know what to do, or maybe you just want to make sure you never get an IRS notice again, and if you do, you know exactly how to handle it. Well, in today's video, we're going to go through the #1 most common IRS notice that I see and exactly how to avoid it, as well as how to handle it if it's already too late. And if you don't know me, I'm Jasmine DiLucci. I'm a tax attorney, CPA, and enrolled agent. My day-to-day is actually running my CPA firm and my tax law firm, but I started posting on social media after a decade of practicing tax to show you actual tax law. So IRS notices suck. If after receiving an IRS notice, you've ever thought, oh, no problem, I'll just give the IRS a call and get a crystal clear explanation on how to handle this, you have probably never had to deal with the IRS. Even worse, you think, oh, my accountant's gonna know what to do. Not always a good assumption. IRS issues are a whole separate animal, and no one cares about you more than you. So today, I wanna give you the information to protect yourself when it comes to the IRS. So here are some examples of the IRS notice that I'm talking about in today's video that you don't wanna get. These are all the same type of notice, which is a CP 2000, and you can tell the type of notice based on what it says in the top right corner. This is an automated IRS notice that basically says the documents that the IRS has on file for you don't match what you put on your return, so they have ever so kindly and generously adjusted your return for you, and of course, it is never an adjustment that leaves you with a refund. They also very kindly wait about 1 to 2 years to send you this notice so that extra penalties and interest have accrued. Finally, the IRS autofills a negligence penalty because why not just assume the worst? And if they don't put a negligence penalty on your notice, it's because they put a substantial understatement penalty on your notice, which is even higher. So this is the breakdown we're going to go through. Step 1, what caused the IRS notice? Step 2, what to expect now that you have it. Step 3, how to respond to it. And step 4, how to avoid it from ever happening again. So let's dive right into step 1, what caused the notice in the first place? So the IRS has a file on you. For example, when you extend or file your return, that goes in your file. When you have a W-2 or 1099 that is filed in your name and social, that goes in your file. And when you make a payment or have tax and penalties assessed, that goes in your file. So since the IRS has a file on you showing some, not necessarily all, of your gross income without netting the expenses, when you file a return without all of that gross income, they add it to your return automatically. For example, you sold a home. Since you lived in the home more than 2 out of the last 5 years, you qualified for Section 121 personal home gain exclusion, and none of it's taxable. Yet, your accountant leaves the sale of your home off of the return, since a lot of tax softwares actually automatically do that if they know that you qualify for this exclusion. Then the IRS sends you a notice adding the gross proceeds of the sale to taxable income and assumes you purchased the home for $0, since that will get your attention. And that's exactly what generated this notice for $268,000 in tax. Not accurate, yes, but still your problem to deal with. Another example, you distribute funds from your IRA in January of the tax year. You then forget about it by the time you're filing your return a year and a half later. Then, 2 years later after filing your return, you get this IRS notice, and you would have been fine paying the $9,000 of tax due since the retirement distribution is taxable, but now you owe an extra $3,000 because you or your accountant didn't put it on the return, so the tax due is accurate, but now you've got a bigger problem. Okay, we've completed step 1. What caused it is that the IRS has information on you that was not on your return properly. Usually the information is accurate. Sometimes it's inaccurate, but every time it shows up to try to take more of your energy, time, and money, so it's always better to prevent it. So step 2, what to expect now that you have the notice. A CP 2000 notice is a proposed tax, so you don't yet want to freak out. But if you don't respond, it's going to be followed by a notice of deficiency, which is an IRS notice actually assessing the tax, and then the notices that follow are collections notices telling you to pay it. So the best option is to send a complete and substantive response as soon as possible to prevent that notice of deficiency from being sent to you in the first place. But note, I didn't just say send any response, okay? Do not expect the IRS to spend time working to understand your life story or care about your situation. You want to keep it clear, short, and attach proof. Next, step 3, let's discuss how to come up with that response. So here's a template response letter, which I provide a copy in my free tax community linked in the description below. And here's an example of a successful response. So the first page should be a clear and concise statement that outlines your position and what support is attached. Notice how the example is brief. It states the position right at the beginning and outlines the support that is going to be included. We want someone at the IRS to be able to literally do no work to be able to agree with your position. The IRS doesn't care about why it happened or whose fault it is. They want cut and dry information, or they are going to assume the most adverse result for you. The following pages should be the actual IRS notice that you're responding to, and finally, you should include and label your support. And if you have a licensed accountant responding on your behalf, you want to have them attach a power of attorney, or the entire response can be rejected solely due to the fact that they aren't showing up as your legal representative. Finally, step 4, how to make sure you never ever have to go through this again. Remember how I said the IRS has a file on you? Well, the solution to avoid this notice is to look at that file in advance of preparing your return. So here's the process to do that. First, you extend your return. Second is to check your wage and income transcripts for the year. Third is to make sure all of your documents on your wage and income transcripts are on your actual return. Now, as far as timeline, most of the information on your wage and income transcripts is not available until June of the following year. So if you're being extra cautious like me, you're gonna wait to file until later in the year when you know that all of your documents are on your transcripts. But if you wanna file earlier, then you would wanna do the following. First is to extend your return early, like in January. 2 is you can file your return early when you were originally planning to file before April. 3 would be to check your transcripts later in the year, so after June. And 4 is then to file a superseded return, which is a new original before the extended return deadline if you notice items that were left off of your original return. A superseded return process is quicker and you don't have to point out the differences between the returns like you would with an amended return. So as long as you make sure there's no income on your transcripts that goes unreported on your return, then you should be able to completely avoid a CP 2000 notice and the penalties that come along with it. So you might be thinking, I have worked with 8 different accountants and I have never heard of this before. That would be normal. Since what I said at the beginning of this video is true, IRS issues are a whole separate ballgame, and if you want to learn more so you can protect yourself, then join my free tax community where I deep dive into actual IRS strategy, actual tax law, and provide free help. And as always, for actual tax law from a tax attorney, subscribe.